Good morning. It's Friday, the 12th of January here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, UK fighter jets join the US in launching airstrikes against Houthi targets in Yemen.
Christine Lagarde says that history suggests another Trump presidency would be a threat to European interests.
Plus, we have a special report on some very large refund requests as private equity bankers demand their money back.
Let's start with a roundup of our top stories.
The US and the UK have launched airstrikes on more than 60 Houthi rebel targets in Yemen in retaliation for weeks of attacks on commercial shipping in the Red Sea. The Prime Minister, Rishi Sunak, described the move as limited, necessary and proportionate. President Biden left the door open to further action, saying in a statement that the continued attacks in the region would not be tolerated. Defence analyst Simon Diggins says Western leaders had to act.
I think some kind of response was both necessary and justified. What now happens, of course, is the interesting question: how long will this continue for? Will there be a kind of response? Will there be a dialing down by the Houthis in terms of their attacks, or will it escalate?
Simon Diggins' warning of further escalation comes after the Houthi leader Abdul Malik al-Houthi used a TV address on Thursday to warn of a major response to the US and its allies if they proceeded with military action against the group.
We will not hesitate to do everything we can, and any American aggression will never go unanswered. The response to any American attack will not be at the level of the operation that was recently carried out with 24 drones and several missiles, but rather much greater.
The words of the Houthi leader there, spoken by a translator. Now, deterring the Houthis, who are designated by the US and the European Union as a terrorist group, won't be easy. Since taking control of the Yemeni capital Sana'a in 2014, they've successfully withstood a Saudi Arabian-led military campaign to oust it and remains firmly entrenched.
Oil has jumped more than 2.5% on the news as fears of escalation in the Middle East grow. The Houthis had launched their largest assault to date on shipping in the Red Sea earlier this week, despite the presence of a US-led naval force. Davide Serra, who's CEO of Algebris Investments, says for now things are under control.
The market fundamentally cares about oil prices and the implication to the routes trade. I would say for the time being this is contained because these are flares up, they're not being structural, attracts more media attention rather than de facto economic impact.
Despite Sarah's view, the news of airstrikes also pushed gold and stocks of Asian shipping companies higher.
The European Central Bank President, Christine Lagarde, is warning that a look at Donald Trump's first term as US President raises concerns about his potential return to power in 2025. The policymaker also shed light on when the market can expect monetary policy easing in the euro area. Bloomberg's Charlie Pellet has the story.
Lagarde told France 2 TV that, quote, if we should learn lessons from history, from the way he led the first 4 years of his mandate, it is clearly a threat. She said it's sufficient to look at the trade tariffs, the commitment to NATO, the fight against climate change. In just these 3 areas in the past, American interests were not aligned with European interests. Lagarde also said the European Central Bank will start lowering interest rates once it is convinced that inflation is headed back to its 2% goal. In New York, Charlie Pellet, Bloomberg Radio.
A trading probe at Morgan Stanley is expected to be resolved without criminal charges. The firm could announce a pact with authorities in the coming days. Bloomberg's Tiwa Adebayo has the story.
Under $300 million will likely be enough to settle a years-long investigation into employee conduct at the bank. According to people with knowledge of the situation, Morgan Stanley is close to an agreement after Manhattan federal prosecutors and the Securities and Exchange Commission scrutinized its employees' handling of market-moving stock sales or block trades. The payment would amount to less than investors' worst fears in a case that has hung over one of the lender's prize units and reverberated across the industry. Representatives for the DOJ, SEC and Morgan Stanley declined to comment. In London, Tiwa Adebayo, Bloomberg Radio.
A $1 billion lawsuit which accuses HSBC of poaching secrets and employees when it acquired Silicon Valley Bank UK is going ahead. A San Francisco judge denied the UK bank's request to dismiss the legal action, which alleges HSBC broke contracts and misappropriated information. But she added plaintiff First Citizens needed to amend its complaint, describing it as confusing.
China's exports posted the first full-year decline since 2016 as global demand faltered and prices fell, hurting a major pillar of growth for the world's second biggest economy. The country sold $3.38 trillion worth of goods to the rest of the world last year, a 4.6% drop from the record a year earlier. Shipments had soared during the pandemic as people stepped up purchases as they worked from home, but demand from Europe, the US and elsewhere faded as interest rates rose.
Bitcoin's first ever ETF went live with record amounts of money changing hands. The Grayscale Bitcoin Trust saw the largest ever first day turnover for an ETF with $2.3 billion exchanging hands. Founder of the crypto money transfer startup Strike, Jack Mallers, was bullish.
I don't own any dollars anymore. I'm sick of them. I think the real risk is owning dollars because all they do is go down. And traditionally, the game was, well, shoot, what do I own? The government's going to keep printing currency. They're in so much debt. Do I try and own a house? Do I try and own an index of stocks? Do I try and find out what Jeff Bezos is up to now that he's not the CEO of Amazon? And Bitcoin is the most accessible, most simple, best expression of this problem.
Mallers called the price of Bitcoin hitting between $250,000 to $1 million in 2025. The token's currently trading at just over $46,000, less than a fifth of his forecast. Now, in a moment, we'll talk you through the market reaction to those US and UK strikes in Yemen. But let's first of all get more details on what's actually happened in the past 12 hours, as we have heard news that the US and the UK have launched airstrikes on those militant targets in Yemen after the weeks of attacks on Red Sea shipping by the Iranian-backed group. Our Middle East breaking news editor, Dana Crate, is with us for more. Good morning to you. What is the size and scope then of this operation?
Good morning. The US-UK strikes were definitely considerable. The US and allies executed what they said was deliberate strikes on more than 60 targets at 16 Houthi sites. What they used, some 100 precision-guided munitions of various types were used in the strikes. The targets included command and control centers, munition depots, launching system, production facilities, and even air defense radar systems. So the attacks were considerable. And we heard a lot of Houthi sources saying that there were explosions in Sana'a, in the capital, and of course near the Hodeidah port.
The Houthi leader on Thursday vowing a, quote, big response if the US and allies took military action. What is their position?
We had the first response from the Houthis earlier today saying that the act was a foolish one from the US and it would be wrong to think that such strikes would deter them. They also said that their aim was and will continue to be preventing Israeli ships or ships heading to Israel from passing until Israel stops its aggression on Gaza. Their leader has had a televised address yesterday before the attack, but likely, of course, in anticipation of that. He said that they would respond to any strikes on them and it would even surpass the level that they carried out on a U.S. ship earlier this week. That was their largest since they started.
Donna, Saudi Arabia has called for restraint. The UN Security Council is going to discuss events in the Middle East today, but it's Iran's response to the attack on its proxy that'll surely determine what happens in the next stage of this crisis.
Indeed, what we're waiting for to see is how and if Iran would respond. Not the government itself, but of course through the proxies, as has been the case since October 7. Tehran has said that it doesn't want an escalation that could lead to a wider war. But the question is whether Iran or its proxies will feel like they would want to save face. Israel has expanded its attacks on Hamas and Hezbollah beyond its border, and now the U.S. is striking the Houthis. So from Iran's perspective, this is an escalation and it threatens its assets that are spread out in the region and have somewhat been successful in cementing Iran's influence in the Middle East.
Are there other events that we're waiting for today? I mean, certainly the UN Security Council discussing the Middle East once more. this is a conflict that has so many players now around the world involved.
Yes, indeed. So what we're waiting for is, of course, reactions from the UAE and more on how the Saudis will witness this. Both the UAE and Saudi Arabia have kind of made it clear that they don't want the conflict in Yemen to expand. They have been trying to put out that fire for a while and putting so much effort into that. The Houthis have been also a threat to both these countries. We remember a couple of years back, the Houthi drones were being launched toward the UAE and Saudi Arabia. And in 2019, Houthis claimed a drone strike on an Aramco oil facilities, and that briefly knocked out some 50% of Saudi Arabia's oil production. So this is a real threat in the region, the Houthis themselves, and on the Gulf. So it just remains to see how much the Gulf countries, especially UAE and Saudi Arabia, the biggest influencers here, would react to that.
Okay, Donna Crashaw, Middle East Breaking News Editor, thank you very much.
Well, following the airstrikes on Houthi targets, oil prices rose, reflecting concern about the possibility of a broader conflict in the Middle East. Joining us now to discuss is our Middle East energy reporter, Anthony Di Paola. Good morning. Thank you for your time, Anthony. What has been the reaction exactly in oil markets?
Good morning. Happy to be here. We have seen an increase in oil prices, as you said, both on the U.S. benchmark WTI and the European global benchmark Brent. We're up about 2% now, and we're close to some of the day's highs in terms of gains. But that price is perhaps a little bit muted if you're considering the prospect of a region-wide war. It doesn't seem like oil markets are pricing that risk in as much as you might think. I mean, at below $80 on Brent, we're still below some of the levels that we saw last year. And that's because the market is kind of looking through the current risk at the fundamentals, and traders are feeling that the market is a little bit long in terms of supply, that there's a little bit too much out there, and that is keeping a lid on prices at the moment. Even though we do have this increase, it's not as high as you might expect.
Of course, there is the prospect of back and forth attacks now, potentially over the coming days. How much are crude flows actually at risk here?
Yeah, that's a big question, and I would say from looking at the oil price, it doesn't seem that the market is pricing in that much risk. What we've seen is, our attacks on shipping, mainly in the Red Sea, since about mid-December, and the risk there has been mainly on commercial shipping, cargo vessels. We haven't really seen oil tankers targeted as much, so I think that's why the market is discounting that risk of an impact on oil prices. We did see yesterday an oil tanker that was seized on the exit of the Persian Gulf. However, we have seen Iran take some vessels in kind of tit-for-tat responses when some of their oil flows have been impeded. So the market didn't really react to that yesterday either. So I think they're seeing that as kind of an isolated impact rather than a full-on focus on taking and interrupting oil flows.
Okay, very interesting. Anthony, I understand that your focus is on the energy markets, but just can you speak a little bit to the broader market reaction so far? Is that also quite measured, quite sanguine, given the concerns? Does that underestimate the risks of a growing conflict? How are the broader markets reacting?
Yeah, I mean, the market is also looking a bit more relaxed generally as well, and I think oil kind of does also set the tone for that. And as I said, oil specifically isn't being targeted, and that's because, as Donna was saying just in the previous segment, that the biggest producers here, the UAE and Saudi Arabia, which is the largest producer in OPEC, they are being very cautious around this in order not to not to attract tension, but not to attract any ire towards them. Saudi Arabia, both, and the UAE have been victims of attacks before, and they really want to avoid that. So they are taking care to kind of keep themselves out of this conflict. And there is a lot of recognition that Iran also seems to not want to get directly involved in that. They are acting through proxies, but it seems that on all sides, there's less interest in getting kind of a direct war between, say, Western countries and Iran specifically. So they seem to be looking to do this through the proxies at the moment, and that limits the risk of that wider war. That said, there's always the risk for incidents when you've got a lot of military equipment in the region, a lot of conflicting interests, a lot of military equipment there. So there's always the risk for accidents, which could lead to an escalation here. So the risk is still high, but markets are really discounting that, and I think they're looking through at the fundamentals and kind of the will of these countries not to allow that war to spread more widely.
Okay, Anthony DePaolo, Middle East energy reporter, thank you so much for joining us this morning.
Now, we'll turn our attention elsewhere this morning to some of the most influential investors who are giving the world's largest private equity firms a message. If you want money for your next fund, here is our list of demands. Sovereign wealth funds and state pension providers are among investors who are telling money managers that they will only commit in their upcoming fundraisers if their capital tied up in old funds is released. This, according to people with knowledge of the matter. It's a very interesting story. And our reporter, Laura Benitez, who's been looking into this, joins us now. Laura, good morning. What sorts of requests are PE firms facing now from some of their largest investors?
Well, they are saying, if you want our commitments to your upcoming funds, then you have to release previous distributions from previous vintages of private equity funds. They're also asking for more disclosures into underlying investments, and they're asking for things like, more power at the table, a bigger seat at the table, co-investments, things like that.
How are private equity firms keeping their investors sweet then, considering the distributions and fund exits which have been challenged?
Well, they're doing things like raising NAV loans as a way to release funds and give them some distributions back. So that's a short-term solution, if you like. But there's all sorts of creative thinking going on behind the scenes, things like secondary funds where you can sell your stake of your fund into a secondary market, but you might be taking a 10 to 15% discount if you do that.
Yeah, I mean, the private equity firms have had such a strong run. How is it that the power sort of shifted now to the investors?
Well, things like fund distributions last year were at all-time lows, exits were at all-time lows. And I think, investors now are more concentrated. So you've got these big, powerful investors and they're becoming, sort of a smaller handful of players, if you like. So I think they've now got this real clout and heft and they're able to actually, kind of pull the strings a little bit more than they have done before.
Who are we talking about here? Who are some of those big backers of private equity, and how, I suppose, has that cast evolved over the years?
That's a really interesting one because, 5 years ago we didn't really see many Middle East funds in the top 10 or even certainly not the top 5. Now, there's 5 Middle Eastern funds that are in the top 10 players and investors in private markets. So you're talking about PIF, ADIA, Mubadala, ADQ. So you can really see that concentration building up in the Middle East, which is a really interesting, sort of evolvement.
Yeah, no, absolutely. So then in terms of fundraising for private equity this year, what are the prospects?
So for private equity, it's not looking great so far. I mean, forecasts from data providers like PitchBook, for example, are saying that it's looking like it'll be 30% below it has been, or the median levels for this year. Private credit, that's looking a little bit brighter. But again, you've got a handful of players there that are raising, huge amounts of money. So it's quite concentrated. So it could be quite patchy. But it'll be an interesting year to follow, I think, in terms of fundraising.
Yeah, that's interesting. I mean, how different is the situation for private credit? I mean, you say a little bit brighter, but is it a case that, investors are shifting from one to the other?
I think so. I think private credit is obviously, it's become a very trendy, catch-all concept in the last year or so, and there's been a lot of reallocations to private credit because, there's more attention around the market, and the fees are sometimes more lucrative for investors. But as I said, there really are just a handful of firms, private credit lenders, that are taking the lion's share of fundraising at the minute.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.